Hello, my name is Corey Mitchell with TradeThatSwing.com, and in this video we're going to look at what's covered in the Forex Swing Trading Course. If you go to TradeThatSwing.com, under the Trading Courses, you can find courses on various assets and time frames, and we're looking at the Forex Swing Trading Course. If you're looking on a mobile device, you'll see the menu as just some lines. You can click on that, and then you'll see all these open up the options to expand them on the menu. So there's some information on this page, and we're just going to kind of go through what the course covers with some additional information. And yeah, 13 videos, 7 hours of content, and these do get added to over time. I'm not going to, I don't know exactly when, but depending on the questions that come in, I'll usually provide clarification videos, and you can always ask questions below the videos. That's how I know what people have questions on, what they need clarification on, and I respond to those. So you're not totally left on your own to figure it out. You can ask questions below the videos. So this is the table of contents. Oh yeah, and then I'll also add in terms of additional videos, if there's new strategies or better ways of doing things that I find, I'll also make videos on that. So there will be other strategy videos likely added to this course over time. If you look at some of the other courses, there have been multiple strategies added, and that's just a way to kind of continue your learning. And also sometimes something might be very similar to one of these strategies, but I've found a better way to implement it, because over time I'm trading these and looking at these, and yeah, I might find a better way of doing things. They're working better, but I might find a way to make it more efficient, for example, where I don't have to look through as many pairs or scan as much or something like that. So there's always that continual process of trying to make things better, and I try to make these courses better by adding additional videos and context. So the course starts out by looking at how you should use this course. There's lots of information to absorb, so it's probably best not to just dive in and try to implement all three of these strategies that are in the course right away. You might want to pick one. This first one, we'll talk a little bit more when we get to it, but it is for specific high volatility circumstances when there's a lot of movement going on in the market. That's when we use that one. That's not happening all the time. There's times when the Forex market is fairly quiet, and this wouldn't really capture a lot of profit during those times. It's best used when there's lots of movement, something going on, when daily movement's fairly high. So in that case, that could be one, and it's pretty systematic. So you could use that one. It doesn't take a whole lot of learning for that one. So that's the one you can kind of keep on the back burner and have it there. Whereas these other two are going to take a little bit more practice to get used to. They can be traded on different time frames, things like that. So these other ones, I would pick one. I'd go through both the videos, pick which one you like, work on those. So that kind of process, like how you would go through and actually learn and practice and improve on these strategies, is discussed. Then you also want to develop your Forex swing trading plan. This includes which strategies you're going to use right now, what time frames you're going to. I would set parameters for when you will be placing your trades to keep sort of a routine going, because if it's always changing, like one day you're placing trades in the evening, one day you're placing trades in the afternoon, it's going to be a little bit harder to gain some consistency because you're not consistent with your approach. So I'd sit down and kind of think about, and this is pretty extensive what I go through in this Forex swing trading plan, really kind of think through how you want to plan out your trading and how you want to trade, because that's going to give you a roadmap to success. We'll talk about position sizing and rollover, how to figure out the best position size for your account, the trades you're taking. And then also rollover. Rollover basically allows you to make interest or possibly pay interest depending on which currency pairs you're using. So when we swing trade, we're going to be holding positions overnight, and those currencies have different interest rates in them. So Canada is going to have a different interest rate than the US or the UK. Sometimes they're the same, but they can be different. And the bigger that differential is, that could mean every night you are receiving that interest into your account or you're paying it. So we talk about how that works and how it can actually be a secondary stream of income to your swing trading, because you're taking trades based on direction, where you think the price is going to go, so you make money on that. But if you can also line those up where you're also receiving the interest, you can receive interest plus make your capital gains. Practicing and improving, that's a big one. How this course is actually pretty intensive on this. I go through a lot of examples of how we could implement sort of a basic strategy, and then how we can look at our charts and our trades and over time try to improve on our performance. And we'll also go through how to practice these initially just on historical charts. But that improving over time is really important. And I think a lot of people just want, like, just tell me when to buy. And yeah, that can work. But then, if you're getting signals or you have like a very simple system, usually extremely simple systems, highly automated, are going to produce, maybe some profit, but it's going to be very hard for them to make great returns because the market's dynamic. It changes. If you've ever looked at a chart, you'll see periods where, the price is moving a lot, and then other times where it's moving very little. And we have to be able to isolate and determine, there's not a lot of movement right now, so I should be backing off because there's not a lot of movement, or use a strategy that capitalizes on that lower movement. And if there's higher movement, use a strategy that capitalizes on that. So we do have to have a little bit of a calibration to how the market is moving, and also look at our own trades. Maybe, the strategy as I've outlined it is profitable, but it doesn't quite line up with maybe when you can exactly trade or something. So there's always room to tweak a little bit what the strategy says, and to make it actually more profitable for you. You might find that fixed risk reward for the trends you're taking and when you can trade and when you can look at charts and the pairs you're trading works very well, whereas other people may find a trailing stop loss works better for them, just to suit their life and also their personality. So we look at how to take the strategies, and of course they're taught in their form. You can go practice them, backtest them, trade them as they're outlined, but we do want to go in with that improving mentality so that we can continue to adapt and sort of move beyond our current understanding. Order types and when to use them. We look at how to place your orders, which order types to use. Are you going to use a market order to get in? Are you going to use a limit order to get in? Are you going to use a stop order to get in? So we look at the different situations when you would use those different order types. And it is important because unless you want to be sitting in front of your screen all day waiting for an opportunity, you're going to have to know which order types to put out so that they can execute potentially while you're away from your desk, because it's swing trading. You're not going to be able to watch these trades, which could last hours to days to weeks, depending on the time frame you choose. We'll talk a little bit on that. And so you want to have some flexibility, and different order types allow us to do that. The moving average with ATR strategy, this is one time frame. It's pretty systematic, and as mentioned, it's for higher movement type environments. So we look at how to determine when it's either a high movement environment or a low movement environment. And when it's high movement, then we look for trade signals. When it's low movement, we do not. The trend continuation following strong move strategy. In this situation, we're waiting for strong price moves, and then we are trading the next move following. Each one of these has little quizzes to help you understand the strategy better, to look at maybe when you wouldn't implement the strategy, when you would, because that's important. A lot of people go through a vicious cycle of having a great period, but then they also don't know when to just sit on their hands, and they end up giving all their money back. So we want to get rid of that cycle. The quizzes help with that, looking at when to place your trades and when you can kind of say, you know what, that's not a great looking setup, I'm going to sit out. So this one can be traded on various time frames. I'd say start with the daily, and we talk about that in the course. But then you could potentially make this a more active strategy, you could use the weekly. That's probably the best one to start with. A little bit longer time frame. Trades are going to last several weeks. And then you could move down to the daily and the hourly to make the strategy more active. The channel strategy with great risk reward. You may have heard of trend channels before, and they happen a lot in currencies. Currencies often get kind of stuck in these bands, and there are periods where you have like a really big uptrend or a really big downtrend, but a lot of times it's just kind of oscillating back and forth. And if you think about it from sort of a macro perspective, sometimes there's not a lot of change between countries. If Canada is doing pretty well and the US is doing pretty well, that currency is likely just to kind of fluctuate back and forth. There's no one that's like really taking over in terms of strength. And that's what a currency pair is. You're combining two different countries and you're trading one relative to another. So we do have lots of these periods where the price channels, and we want to be able to take advantage of those periods. So these first two strategies take advantage of those trending strong movement periods, and the channel strategy takes advantage of more of those choppier type periods in the price action. This really digs into how to draw channels, because if we're drawing something on our chart, we want to have guidelines on how to draw it, because it's going to affect our decision making. So we shouldn't just be like randomly drawing lines on our chart, because if we draw those lines different every time, then how much consistency are we likely to have? Probably not much. Whereas if we have a more consistent approach with how we draw things on our chart, then we're more likely to have consistent results, and we can test and verify how things are working more easily. This one, highly adaptable to hourly charts, daily charts, weekly charts, whatever kind of time frame suits your life. So both of these ones, this one's a little more static in terms of which time frame to use. But this one, and all of them, pretty flexible on when you can trade, how you can trade, how long you want to hold your trades. But these two, especially if you're more inclined to holding trades for several hours, then you could use an hourly chart for these, and you can kind of hone in on those shorter term moves. If you don't have a ton of time to watch your charts or look for trades, you could use a daily chart or a weekly chart or a 2-day chart to kind of hone in on how long you want those trades to last and suit your own personal circumstances and time frame. News is important to understand in the market, because in the Forex market, you have scheduled economic announcements. So Canada will come out and say we are releasing GDP numbers at this time on this day, or the non-farm payrolls report will come out on this Friday at this time, and those are put out in advance on an economic calendar, and they cause big price movement. When we're putting out orders, we want to be aware of when those news events are coming out, because let's say you're trading an hourly chart, a big news event's coming out, your stop loss isn't very far away. There's a chance that the news could just, a quick blip could hit your stop loss. On longer time frames, that's less likely to happen. On a daily chart, if your stop loss is, quite a number of pips away, that news is likely to have less impact on your trade than on a very short time frame. So that video looks at just how we negotiate news. In what situations do we hold our trades through news? In which situations should we wait for news to come out and then place our trades? And just how we navigate that overall news situation, because some of these events can cause really big price movements. And we always want to be controlling our risk first and foremost. We don't want to just get immediately stopped out, or worst case scenario, you have a stop loss very close to the current price when the news comes out, and that price ends up gapping because it moves so fast that even a split second, your order gets filled at a way different price than you want. So you thought you were going to risk 1% in your account, and all of a sudden you lost 5. That's the situation we don't want. And so this video kind of looks at all that context and how we navigate around that. Then we look at a sample routine for finding trades. You have some strategies here. How do you actually go about finding the trades that match these strategies? As soon as you purchase the course, you'll have access. So even if you don't get the email right away, or it goes to your spam folder or something, you can go to the members area here on the main thing. You can log in with your email and the password you set up when you paid for the course, and you'll have immediate access. Then if you don't see the receipts, check your spam folder, because they get sent out automatically right away. So you'll see, as soon as you pay for the course, those receipts and your login information and stuff will be sent to you, but you should know it already because you'll have just put in the password you want and your email. There's a little bit more on this page just about who I am and some additional information on the course, but that is the basic rundown of the Forex Swing Trading Course. I hope to see you in the members area.